Hello, this is Greg Giardino,
And I'm Allison Hall.
and this is It's Your Smarter Money. In today's episode, we'll be speaking about what is a qualified charitable distribution. So we're getting to year's end. A lot of folks want to be giving back to causes that are near and dear to their heart. So we want to talk to you a little bit more about one of the more tax efficient ways of donating through charity. So, Allison, with that being said, maybe you could tell our viewers a little bit about what a qualified charitable distribution is.
Will do. So a qualified charitable distribution, or we'll be calling it a QCD to just kind of shorten it a little bit, is a strategy that allows you to send payments directly from your IRA to the charitable organization of your choice. There are a couple of requirements. So you have to be over 70 and a half. There is an annual limit of $108,000 per person. And the donation needs to be made directly to a charity. So it needs to be an IRA, can't be a 401k or 403b, and it needs to go directly to the charity, not to you and then to the charity, not to a donor advised fund and then to a charity from A to B. If you meet those requirements and are charitably inclined, you'll get some nice benefits. So if you're over 73 and you're currently subject to required minimum distributions, a QCD is going to count towards it. So it's going to potentially reduce the amount that you need to take out. It also reduces the amount of tax that you're going to owe because those IRA funds are never going into your hands. It's just going directly to a charity. So it's never considered taxable income. Doubling down on that, there are certain things to be concerned about as far as your income, like Medicare premiums, for example. They're tied to your income. It may help reduce your Medicare premiums. If you're exposed to the net investment income tax, that extra 3.8% on investment income, keeping this out of your taxable income may actually help you avoid that or reduce your exposure to it. So that's kind of the overarching strategy. Greg, do you want to talk about maybe how like the tactical works for it?
Absolutely. So, as Allison just mentioned, there's a lot of great benefits of doing a qualified charitable distribution, but you may be wondering, well, how does this actually work? Well, first off, the onus is on you, the taxpayer, to make sure that you report this properly. At the end of the year, if you take money out of your IRA and you get your tax form, the 1099, it's going to show as a taxable distribution. So the onus will be on you to record it as a QCD on your tax return or to mention it to your tax preparer so that they can record it correctly so that it is not taxable. So let's take a look at this picture here. It may be a little bit blurry, but how it actually looks, if you go to line 4A on the tax return, you'll see the line item IRA distributions. So hypothetically speaking, let's pretend for a moment that your required minimum distribution for the year is $10,000. If you'd like to donate that $10,000 directly to charity, you'll see how you report it on line 4A, you put $10,000. And then on line 4B for the taxable amount, you'll write the words QCD and you'll put a 0. So that's how you actually report it. For instance, if your required minimum distribution was $20,000, line 4A would be 20,000, and you'd put the net difference of a $10,000 QCD, so you'd put $10,000 on line 4B. That's how that would look. So what's really important about this, you got to let your tax preparer know. Also, the IRS has a first dollars out rule. What that is in any given year where someone needs to take a required minimum distribution, the dollars that come out first are assumed to be designated as an RMD. So this is really important. If you want to make a QCD for the year, make sure you do it in the beginning. So for somebody, if you take an RMD in the beginning of the year, you have a $100,000 RMD, you take it out, and then a month later you want to do a QCD, you lost your opportunity. So keep that in mind. And then also make sure when this happens, your custodian, so for example, if you have your money at Fidelity, Charles Schwab, they're going to make you fill out a form. They'll either send you the check or they'll send the check directly to your charity of choice, whether it be Habitat for Humanity, American Red Cross, they'll do that for you. And also keep in mind, moving forward in 2026, you may be getting some relief when having the onus of having to make sure this is labeled as a QCD. They're going to introduce a new code Y. I won't get into specifics, but some of the bigger companies are catching on now, and there may be relief. But for now, in 2025, make sure you label it as a QCD. So with that being said, we hope you learned a little bit more about QCDs. And until next time, we'll see you soon. Take care.